following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 11 o'clock till noon Eastern Time at 877-927-6648. And let's just go straight to the numbers first. I want to say thank you to all the hosts. Great programming starting at 8 o'clock on a Monday, just all the way through till 6 o'clock, till 5 o'clock tonight. Tom O'Brien wraps it up. Hey, this is a very important period. You'll see that we're bumping into resistance area. There's still technical signs that are somewhat good. There are a couple of signs that are starting to show a little bit of wear and tear. We'll go right into it. The Dow is right now down 21. And let me just move this away. Right there. The Dow's down 22 at 17,579. S&P is down 393 at 2,045. Comp index is down 5 at 4790. The VIX index is at 14.49 in that 15 or lower area, 15s or lower area. That is buying intensity. So we're going to see how this plays out over the next few days. Very important 3 days, and we'll see why. The E-minis right now down only $1.75, although they've extended by making 2,044.25, the new recovery high made earlier this morning, which on a daily basis extends as I'm calling it leg F for now. It could recycle. I'll get into the whole recycling thing if, in fact, there is a pullback of only like 2029-ish, and then by the end of the day, we're close to the high recovery high. Tomorrow, make a new recovery high. I will have to consider it's not a G, but it's a recycle. And it's probably a brand new leg C to the upside. That's just the way I'm going to have to look at it. Meantime, back at the ranch, the MACD is still good. The stochastic still good. There is an unbalanced volume reversal on the weekly chart. Has in fact mimicked to a large extent what happened earlier on back in October when it ran up so sharply. So we'll keep monitoring this, and I've got a peak G/C in the 120-minute chart in the Chapman wave methodology. 995 was the start of the move up. We'll see what happens here because a new break above 2044.25 by just 25 cents starts a leg D, and then once again you're going to start saying, hey, you're getting close to some kind of a pullback. The technicals are really quite weak in the 120-minute chart. What I'm going to do is I'm going to move this down, show you a couple of things as we move along. So if you look at the IWM, which we wanted to go to a leg D, and it did that on Friday, Thursday and Friday, and now it's slightly, well, 109.94 is the high today. The high on Friday was 109.95. That 1 penny so far will be making a difference because this could turn out to be a peak D. Just as the MACD is starting to flatten out, the stochastic is at 84%. That's good, but it isn't as high as it was when it made that peak C at 108.99. And I've got a peak D in the 120-minute chart. Remember in the Chapman wave, what did we look at? We look at the lowest, most identifiable low in the IWM, the Russell 2000 ETF, went to, on the 11th of February, went to 93.64 and then ran up to peak A, peak B. Each higher peak is counted in the Chapman wave with an uppercase letter, and on the downside it's lowercase, and you don't make a peak like here. You can only call it a peak until the bar is completed. That is, the entire day is done, and it has not gone. If it goes to 109.95, that continues leg D. It has to make a peak. In other words, it has to be 1 penny less. Look at the New York Stock Exchange, NYA.X. Oh, and I do have to talk about Brooklyn. I've never seen anything like that. Brooklyn's never seen anything like this. The number of new apartment blocks, but blocking the most beautiful view of Manhattan, the number of apartment buildings, and really big. I'm talking quite a few hundred apartments, if not more. And I don't know if they are condos, if they're rentals. Some are rentals, some are condos. I don't know which is which. But I can just tell you this. that this is a change that goes on for the next many hundreds of years, because you don't take away buildings, especially residential buildings. They tend to stay and stay and stay. So this has changed the landscape of Brooklyn. If I talk about a glut of apartments, the city's always saying affordable housing, affordable housing. I have to tell you something. The least affordable housing is going on in these northeastern cities. It is uncanny. And the way it's going to be resolved is when all of these buildings are finally done in the next year and a half to 2 years, you will have a glut like you've only seen. Talk about the market turnaround in real estate in those cities like Las Vegas, down in Florida, from 2007, 2008, 2009. I think this is going to be something just as serious. So I'm looking at it and I'm saying, wow. All I can say is that when you see this number of buildings going up, entire blocks that were just either warehouses or nothing, there were no residential. And now you're getting these entire blocks with buildings, multi-story buildings, 6, 7, 8 floors, some are even bigger, completely full. Completely full of apartments, that is. At the bottom, now the whole thing, of course, is to have, at the bottom you have storefronts, and then you have some kind of gymnasium, all that sort of thing that you want. Everything is called luxury. Remember, luxury is with an X, but when you see it, when it's spoken about, the advertising medium about 10 years ago, I noticed this trend towards calling it a luxury with a G. A hard G, luxury, as if that's really making it more than luxurious. So, of course, what happens very often, you get luxury apartments, and the area is not exactly luxury, but they have to say luxury. So they waste those words. All right. So New York Stock Exchange, peak F/B, could recycle. MACD's good. Stochastic's at 94%, but the single leg A up in the weekly chart. Had a number of questions over the weekend. I was away, but I did get to see some of the questions. Couldn't answer many of them. The real thing here that we're looking at, look at GE. Is this bearish or bullish? Look at that monthly. This is a monthly chart, folks. This is not a daily chart. This is a monthly chart. Look at this. Is that bullish or bearish? By my eye, everything about GE's chart says that is really a strong chart. Now we've got just over a week to go. I remember a week from Wednesday, I do my webinar for subscribers talking about the next 3 months. What are we looking at? Socio-politically, economically, just in every way, chart-wise, Elliott wave, what the works. And look at this, General Electric. Look at Triple M. Is that bullish or bearish? I like that. So I'm only expecting a minor pullback here, and then we're going to have to assess. The next week is going to be really important, a week and a half, because we'll be able to assess monthly charts and say, hey, wait a minute. I think this is either looking very good or very bad. So let's just go on. I want to finish this up before we wrap up this segment. So we're going to go to gold. And gold right now is at, what happened to my chart? There it is. Gold right now is down only 8. It was down much more earlier on. It's at 12.45. Silver is down, is up to 2 cents. You've got platinum is up. High-grade copper is holding nicely. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, let's just quickly touch on a couple of things here. One comment seems there would also be quite a burden on the city water and sewer systems. What with population residences that densely packed into such a small concentrated area, multiply that with multiple buildings. Absolutely. I mean, there are a lot of things that go, wait until you think about the traffic. Wait until we talk about the transportation. The subway in Manhattan is fabulous because it can take you almost anywhere. But in Brooklyn, it's kind of limited to a certain extent. There are a lot of things that are going on. I mean, some of it's very positive, some of it is not. They are trying to do a great job with the actual walkway all along the path from the different sections of Brooklyn along the water on the East River. So we'll see what happens. Now, let's just go through a couple of questions here. What about the XLU? I was asked about the XLU. I went to the wrong one right here. XLU, look at this. XLU has had a really nice move. It's gone to a leg. I'm calling it F for now, although this is one of those where the technicals are such that it has a pattern that suggests very strongly that this did not recycle. It should be probably a B, but I'm going to call it just F for now, to say, hey, be careful if the utilities, the S&P Select Utility Spider Fund is trading at 48.62, just down a penny. I think I need to do this just to make it clear. This is one that I really do have to do. F/B. It really could be a B because the stochastics at 92%. The MACD is turning down, but still holding pretty well. And it's the weekly chart that really says to me, hey, don't get too carried away trying to put any bearish connotation here. This pattern you've seen before. You saw this on GE. You saw this on the dollar. We're going to go to all of those in a moment. And the Dow's now up 6, and the S&P's unch. So this is going to be a very important moment. Now, let's just take a look at the XLU in terms of the weekly chart. The weekly chart says that you had an inside buy mode that went to a leg E and pulled back very sharply from the high of intra-week last week to where we are right now. So the high last week was 49.42, and now trading at 48.60. I shouldn't say sharply. It looks sharply on the chart, but it's really not that bad. It's above the 9-period moving average in the daily. But when you make these arch or cup formations, in this case is a cup formation, with a left side, right side price tie match, you've got to pierce the left side high and hold there for 1 or 2 sessions That in this case, it's weeks, because it has to go above 49.78. It missed that last week. So that is still a target. But most importantly, you've got a whole bunch of support in the 47.5 to maybe even 46.5 area as a cushion. So far, I have to say that the XLU, the S&P Utility Spider Fund, is acting very well. When it breaks above, if and when it should break above 49.78, that is the monthly high of January of 2015. Yep, January of 2015 at 49.78. That's going to be very important because you've got the same cup formation. Now I'm going to lead straight into two things. One is the dollar I was asked about, and I'm just going to read this because it's a quote from someone else. So I'm going to give you the quote. It says, US dollar, there's an info service that said, when the United States dollar drops below 95, it has rebounded a month later. This is since 2015, where US dollar has been bouncing around. Now we are in the second calendar year of this. Based on your Chapman wave, when will the trading range rectangle end? Will it go lower after this and turn into a major downtrend? Right now, institutions don't believe the Fed will back off from raising rates and will change their tune in the future to more hikes. Can you compare this possible topping formation in the dollar to 2000 and 2002? So let's do this. Here's the dollar. I'm going to make it nice and big. This is the monthly chart going all the way back. I'm going to squeeze it. Squeeze. To 121 was the round number high back in July of 2001. And it plummets down to 70.70. Hit that a couple of times, went to 72.70 of the last really strong move to the upside. So this is a bold formation. These bold formations, we saw that in gold. Watch this. I hope I can do it. GC, and I think I have to go to P for electronic. Yes. Okay. Look at the gold contract. I actually had tons of charts, all with this notation. Look at the bold right there. It took a long time to form. It had made a high way back in 1987, 88. Then it came tumbling down, and it went to about 461 gold. This is a continuous contract, so those numbers are all smoothed out. Anyway, it made a low somewhere around December, January of 2000 to 2001, right in that area. I remember that the XAU, I wonder if I can just do this, XAU. No, it's changed. Yes, I have it. Went to the 40. I remember at 44, I said, wow, I think I've got a buy signal. And that 41.88 was the low in November. And I think I got this in January, somewhere around there. And look what happened. It went up to 209 and it plummeted down to 63. You got cut by 2/3. And then what happened is it goes all the way back to 232, December of 2010. That's the XAU. And plummets down to the most recent low. I believe it was January of 38.36. 232 to 38. I would say that that's a tumble. Now, let's just go back to the dollar. So now what we're looking at is that the inverse, the rally that we've seen in the dollar and in gold, the XAU, this is the Philadelphia gold and silver sector. And now let's go to the dollar. You see what we're looking at here? The dollar, if you look at it historically, has had long moves to the upside or downside. This is a long move to the upside. We have to be careful because this is a retracement mode and there's no other way to count it because we went to a C. There's no other way. You can't recycle to an H. There's no such thing, or H or an I. So it got started up again. I have to call that a C at 100.51. And if you're looking at this chart, the depth of this consolidation is suggesting that at 95.23 right now, we've got to be looking really closely because these bowl formations, that's not a coat, it's a long spread out bowl. When the upside gets broken, it leaves it free to really articulate each successively higher high with a focal point of the next left side peak. And all of a sudden, you're looking at 102.15, then you're looking at 109.24, September of 2002, etc. So at this particular point, I have to consider that the turn down in the MACD, the turn down in the stochastic, is suggesting that yes, you could get a double, a high-level consolidation that forms a double U, the lowercase u pattern. And that little, especially when it fails to decisively break the left side lip, 100.39 back in March of last year and 100.51 December of 2015. And now look at this candle. So I'm suggesting to you that the dollar is under intense pressure right now on the shorter term. Oh, that's the break. Let me think how I can just quickly articulate it for you during the break, and we'll come back because there are a lot of other things that we want to look at. So Sarah, hold on. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so let me just quickly sum this up. First of all, the Dow's up 15, S&P's ouch. On this, what day is it? 21st of March. The dollar index looks somewhat vulnerable, having only made a C, to the short, and I would even say short, maybe intermediate term, looking out into early summer, in other words, 6 weeks or so, 4 to 6 weeks. And the gold contract, look at this, the gold contract has a short-term pullback, but that weekly chart at 87 and flattening out, I would not be short. And I had a question about, is this the time to buy dust? I haven't had a chance to answer yet, but that would be 3 times short gold. I just don't think so. Oh, yeah, maybe you could get just a real quick trade, but if you wanted to position yourself, I would rather have patience and see whatever I can buy the gold contract or something in gold or the some ETF or ETN that is pertaining to gold. We have one in my opening call. We have one that is a mix of gold. It has crude oil. Look at crude oil. You know, I think the dollar is in fact telling us that crude oil has the chance to make an H pattern. It doesn't have to go all that far. The USO trading at 1056 United States Oil Fund. The weekly chart has made a trough F. I think that I really do think that. Now, here's another one of those alternate wave counts. This could even be an F/A. So maybe on a very short-term basis, it could be a consolidation here between gold and oil, the ones that relate to the dollar's movement. But as I'm looking at it, I think that there's a little bit more to the upside over a period of 4 to 6 weeks in oil to the upside and in gold. So I'm looking at this as if I'm looking to be a buyer. The same as the Dow. Any real big pullback here, I'm looking to be adding to longs in certain sectors. So I had a couple of questions. One is the IBB a buy here? You remember was it Thursday before I left? Yeah, Thursday, we had, I think it was Kevin from Sacramento. We were looking at the IBB and I said, you know, this pattern looks really familiar to me, with that MACD not really breaking down. I would not be surprised, I said to him, that maybe you will get your 240, below 240 entry for if you're going to buy it. But there could be a bounce. And that bounce could actually turn out to be the H pattern, lowercase h in the Chapman wave, going to a lowercase m. And lo and behold, Friday was a fabulous turnaround, was up 5. Today we're up 5 again at 257. So we've gone from the 243, was it? 241.85 level, up just over $1 above the recent low of March the 9th. And here we are. So the answer is, yeah, I think so. And that's the reason why the market, and this is what my big question here is, are we looking at a market that's going to rotate to correct and not just have all the sectors come down at once? And I think we're in that rotation area. So I'm beginning to look at this and say, you know what, maybe the short side might be a real quick trade, but it has to happen really soon, and it has to happen with bad news. And that's just the way I'm looking at it. And for the majority of our long positions, we've raised stops. Things are doing very nicely. I had a question here about copper. Look at this, high grade copper. Nice move. It's at 2.294, up 0.01. I don't know what the copper. We have a particular copper stock. It's gone from 0.35 to 0.58 here. It did hit 0.61. If it gets to 0.62, it's going to be a leg D. I'd have to be a little bit careful there. These are big moves, 45% move in silly little stocks. So I'm watching this and I'm saying there's a rotation going on. Yesterday driving through, was it driving on 95 past Stanford? And lo and behold, what do I see? I look to the right and there it is. I'm always talking about it. It used to be in Times Square. Or maybe they're still there in Times Square. Maybe this is their office or something. But the TR, oh no, I didn't mean to hit that. That was a mistake. TR, it wasn't to buy anything like that, but it was a mistake because it was a chart that I didn't want to mess up. TRCCI, look at this. There's that extension, F/B. Oh man, this is the MACD is good, stochastic is good. I got 2 indicators here that are saying a little toppy, you've hit the 200 period moving average, you should bounce around, trying between the 387 level of the 9 period moving average and the 392 level of the 200 period moving average, with the recent high of 394.25. The Reuters equal weight commodity index is acting very well. This is the reason why I'm saying, hey, be careful. I would not be in dust. I was thinking very seriously of getting into the 200% short gold. And I said, what? You want to be buying gold? It's acting extremely well. I never thought it would be. Got to be honest. In the back of my mind, I'm still saying, hey, there should be lower lows to come in gold. But I'm not going to fight this. I think the trend right now is acting very well, which is the reason why we want to be in our commodity. We're in a number of commodities. We got stopped out at one with a nice profit. I intend to go back in there. So here we are. So TRCCI trading down 37 cents at 391.61. So that is saying to me commodities, and what commodities are there? This is equal weight. Did I write it in? It's the Thomson Reuters Continuous Commodity Index monthly with the Chapman wave notation. I don't have the mix, but we have a mix of crude oil, different oils actually, plus gold, soy. Look at soy. I mean, come on. Look at this. Leg C trying to get to a leg D, right at the 200-period moving average. Wheat, I don't know what wheat's doing today. Wheat's just consolidating. Wheat is not nearly as strong as soy. So I'm looking at continuous contracts. Remember, if you want to really know about these things, you'll listen to Andy Hecht because he talks about front months, back months, talks about the ratios, talks about the volume, talks about interest, all sorts of things. So I'm just doing it purely on a chart. Now, here's another thing that I want to look at. Look at the, I didn't finish, Triple M. Look, Triple M is in a leg F/B, really just walking the 9-period moving average, really close to coming back to test at 164.89, down 44 cents, to test the whole area of 161 to 159. Nice. The W pattern I drew in ages ago is working. I'm not sure why we didn't just buy my Dow Quartet, GE, IBM, Triple M, and UTX when I said they are acting very well, but we didn't. We've got others. So here's the W pattern. Is this bearish or bullish? I must tell you that I have this constant struggle because there are people whose work I really, really do respect. I don't follow them every day. I don't follow them every week. But when I hear them, I respect their work because I know the history. And they are looking for a major decline very soon. And I'm looking at this and I'm saying, I can prepare for a decline. I can't prepare for the decline because I'm still looking at really nice. Look, I mean, look at this. Orly, a really important stock in the automotive parts, O'Reilly Automotive. We made money shorting. Then we made money going long. And now we're stepping aside because it made a peak E as the technicals were fading. It had a sharp pullback from the high of recent high of 270, 349, goes all the way down to 265, 9 points on Friday, and then it bounces back in a nice candle today. There's a fight going on, and I'll talk about that. But that monthly chart still looks pretty good, darn good. Hey, I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So let me just, I had a question about OIH. What was the question? The question was, Bob says, OIH, oil service holders, OSX, would you be short the OIH? Rig had a horrible session Friday. You see, I believe right now that we're looking at fresh shorts. In other words, we're looking at areas that have done really well that are going to be pulling back. This is my thinking right now. It's very early in the week. It's only the first hour or two. So I'm looking at this. I'm saying I'm going to be looking for those. These are stocks that have run up, but I don't believe that the weekly charts are good enough for them to hold. There are others where the weekly charts are just beginning to improve. OIH is one of those to say that it could hold. It doesn't mean to say it's going to race from 27.18 into the 9-period moving averages of 29-ish. So it doesn't mean to say it's going to go up to the high of the 32, 33 area that it made back last year in the third quarter. No, what I think is going to be is that the 9-period moving average of 28.61, somewhere between just a little above it and somewhere below it, the 26.03 to 25.20 area in the weekly chart, that's going to be your base. And it's just going to take time. It's going to be very frustrating for those people who want to be long and they get long at the top of the range, and then they want to get short and they get short at the bottom of the range. This is a range that you got to, you remember the IBB? This is a range. Now it's telling us from the buy, and that's what I said to Kevin. I said, I think this is one of those that where you get to the low, and I was waiting for, we missed it at 240.03. I thought we'd just get it down there and I'd be able to start a buy and just try to race to the top from the 2040 area up to maybe 2067, 2070, very up and down, and one day you'll be wrong. But in the meantime, you can trade the range. So that's what I want you to do. I look at the OIH as if it's in a range. At some point, I'm pretty sure it's going to go lower. I don't think this is the time. So, Bob, I'm going to say hold off. Same as I'm going to say to Lou, hold off on dust. I don't think dust is, you might get something. It's trading at 318. This is the Direction daily gold miners. Oh, you might get a bounce, but the risk on a percentage basis on a $3.19 stock is, look, it's up 4 cents and it's up 1.43. So I'm just saying that on a very short term, if you want to have a quick trade, yeah, maybe you got that. But Lou, I know that you like to hold a little longer. This makes it a little dangerous because the dollar, although I think the dollar will go down, right here is where it's trying to find some strength to bounce from 95.20s to 95.80s, maybe 96.21, and that'll help the dollar to digest some, gold to digest some of its gains. Then I think the dollar might start to pull back. So please, just be a little careful there. SHPG, I can't even see the time. Let me see the time. Yeah, we've got time. SHPG. Now, this is a fascinating pattern. This is, Shire PLC. Now, Shire. I know the name so well. I know the stock so well. Haven't got it updated. I used to have it updated. It's in the medical. Let me just have a look. Shire Wasn't it in the medical devices? Shire, Shire. Spell it correctly or get to, pharmaceuticals. Okay, I knew it was in that area. Patient assistance. You know what? That's an area that I don't find myself being attracted to. Let me just see, Medtronic, MDT, kind of a little different. Oh, did I do that wrong again? Medtronic. It's one of those days. MDT. Medtronic. Yeah, just stuck. This is stuck at the top of the high-level consolidation, and your Shire is HPH, was it? It's HPG. Okay, here's my thinking. Tammy in the Den wants to know. Basil, HPG, I purchased at 156, 156, and it's at 165. That's exactly what I was going to say. This is one of those rectangle formations. There's that H. This is exactly what I'm looking at IBB, that it can go from this pattern and just have another one. And now you're getting close. Tammy, you're getting close to an area where it's either going to break out or it's just going to frustrate like crazy. Because as it gets to the high of you'd love 171, right? 171.36, the high of the 17th of Feb, it should start to hit resistance and then start to come back. On my bigger outlook, I think that this is a short. I would love to short it from higher, look at it as a short from higher up. Let me show you what I'm looking at here. So we'll do this real quickly. This is a peak. Hey, and the other thing, while I'm doing these notations, just want to talk about Brooklyn. What's happened in Brooklyn, the updating and the upgrading is for the next generation. It is fabulous. Some of those, it was really, to tell you the truth, both my children had lived there, and my grandchildren now live there with my son, daughter-in-law. But I have to tell you, it was shabby. It was really run down. Of course, all the young people, all the old folks who left Brooklyn, anyone you speak to who was in Brooklyn from years ago, they left it. They're gone. They weren't interested. Now, the desire of young people to go to Brooklyn is unbelievable. But, first of all, the rents are astronomical. But because of it, they are upgrading those storefronts that had those metal pull-down things that always make areas look like shabby. Now they got this elegance and they're looking good, and the prices are out of, $400-500 for shoes and stuff like that. Maybe some people pay it, certainly not me. So Shire, PLC, I think it's coming down. And my target is kind of hit its first big target of 156. That was the low of October. Great entry point. Tammy, congratulations. But I'm just saying to you, you're in the right mode right now, but if it gets to the 169, 170, raise your stop, or if you can take something off, or be ready to take something off, because if it does turn around, it's just coming back to the test of the 9-period moving average at 159, maybe go a little bit lower, then start that H process all over again. If it breaks out and you're still holding it and it gets to 174 to 175, that is exactly the action you want, because 173.89 is a 200-period moving average resistance in the weekly. So if it pierces that, that's good action, and it can go on for a little while. You see, this is a counter-trend rally in this area. So treat it as a counter-trend rally, but all I would do is say congratulations to you. I would raise my stop on part of my position. I wouldn't get married to the stock. I would just hug it tightly and keep a trailing stop on some part of your position. Good. Oh, and Gate in the Den said the same thing. Great minds think alike. Everybody's on the same page. Whoops. Anyway, that's why I'm looking at it. Good. So another question is, just real quickly, I saw a really good question earlier on. Oh, here's the question. It's hidden away. I need to get to it. Basil, is the no, we did that. Oh, the RB. Oh, there it is. So here's a question, and I think it's a pretty good question. Home builders. I don't know. There was an announcement at 10 o'clock about something with the home builders, but look, here's the HGX, the housing sector index, and I've got it in leg D right now. With a little bit of a pullback going on, down $1.30 from 226.19 at this point, and I've got it here in leg D. If I go to the weekly chart, it is a single leg A to the upside. So I can see when people are saying, we're coming in for a whopping down move. Some people even think we'll go lower than the 50,000s in the Dow. I'm looking at this and saying the only thing that could do it for me is if I get the Chapman wave single leg A phenomenon that fails, and in fact, it starts to come down in such a way that the HGX index takes out the 209 to 200 area. It's at 226.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So for those of you trading the E-minis, this is like a little speak C1, C2. No, it broke down. So this is a new leg, 8 to the upside. They are really trying to rally. Now, I've learned a lot from Dave White when he talks about what happens after options. And he's done a lot of work. I have this at the back of my mind. Back of my mind is not notated mathematical confirmation. And I like what he does. He says that it's usually about the second to the third day that things settle, and that you really get a different, you start to get some digestion, a digestion phase. So I'm looking at this and I'm saying, yep, yeah, we are. This is a very interesting session because there's still some residual buying. And I just want to see where GE is right now. GE is trading at up 5 cents at 30.98. Yep, not bad action. Peak D with the left side, right side price time match. Remember IBM, my Dow Quartet, IBM, Triple M, UTX, and GE. Look, IBM is still rolling up in this leg F. it's getting overbought, but it's above the 200-period moving average. You got the 9-period moving average crossing the 200. That's usually good for just a little while longer before you start to see huge volatility creep in. I can't, fault what's going on. So all you can do is you get your stops in. Your stop gets taken out. I like to have fairly tight stops. I don't mind coming back. For my subscribers know we can try things once, twice, and the third time usually works very well, more than makes up the first time losses. But that's the best I can do. We are not the market. We just attempt to develop techniques that you can use within the market. So let's do this in the remaining time. I've covered almost everything I want to do. I just want to do two things. I want to show you the VIX index in the area of 1375. That was Friday's low. Today the low is 1404. This is kind of the area that I'm looking at, and I'm saying this is where you should start to see some turnaround in the stochastic and the MACD. Hasn't really happened yet, but this is about the area. The weekly chart says, wait a minute, that's a little deep, that MACD. It's going to take time. So my thinking is that we could chop around trying to form a base for maybe 2 weeks going into the first week of April. That's why I wanted my webinar on the 30th to be it's so important, because it's got 1 day left for the March contract to close, the monthly candle. So we can talk about it with parameters. We've got all sorts of things. What do you look for going in to April? What are the levels? Why is it so important? Why is this VIX index having gone from 53.29? Remember, aberration. I don't believe anything. There should never have been a VIX in the 53 area. Should have been more like 32, 33. So that's, to me, I've watched this, believe me, for decades. The VIX index. That was an absolute aberration. China, U.S. interest rates, all sorts of things. Anyway, right now it's at 14. So it's getting to the oversold area. But the weekly chart says, hey, wait a minute, oversold, overschmolled. Look, I'm still trying to form a base here, 10%. I could still go down to 7%. But I think this is the area I'm watching really closely. There could be a turnaround. And the monthly chart is saying, hey, wait a minute, if the stochastic is down at 17% and the MACD is making an M shape with a lowercase right shoulder, maybe the VIX can go deeper. So I'm saying, yeah, I think it can, but there might be a bounce first before it goes deeper. That's really what I'm thinking. But in the meantime, we've got some short positions on. We'll see what happens. So we're about to wrap it up, and you're going to go for your swimming lesson. Don't forget these fantastic swimming lessons. So you've got swimming lesson coming up, Think or Swim. You've got Steve Rose. Remember, Steve likes to talk about the seventh wave and the Chapman wave, the seventh wave. I call it G, he calls it peak 7. It's the same thing, but it's a very important aspect of the notations. And then you've got Dave White, you've got Tom O'Brien. Great shows. I'll be back tomorrow. Have a wonderful day, and I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.